Hello friends, myself Nandip Kadu, and today we are going to discuss about the 7th standard topic of math, that is a bank and the simple interest. This is the 10th topic of your part 2nd, that is a bank and the simple interest. So first of all, we have to study the bank. What is the exact definition of the bank? So what is the bank? According to your textbook, that is the bank is the government recognized institution that carries out transaction of money. Means what is the bank? Bank is nothing but the one type of institution. What institution? That is a government recognized institution. Means to open a bank, you have to take the permission from the government. So this is the government recognized institution. Means if you have to open the bank on a private sector, then also you have to take out the permission from the government. That's why it is nothing but the government recognized institution that carries out the transaction of the money. So what is the bank? The institution where the transaction of the money is done. Means the transaction related to the money is done in the bank. So the bank is the government recognized institution that carries out the transaction of the money. Okay, so banks make it easier to plan the use of the money. Okay, so what is the second use of the money? So the second use of the bank is that banks makes it easier to plan the use of money. Means how we will use the money for such planning. The bank makes it easier to plan our money. Means in which way we can use the money, or in which way we can grow our money. This all can be done by the bank. Means it makes it easier to plan the use of the money. Okay, and what is the third advantage of the bank? That it gives us the financial planning. Financial planning is also done by the bank. We can either deposit cash money in the bank or withdraw the cash from it. Okay, in the bank we can deposit the cash, also withdraw the cash. We can deposit or we can withdraw the cash from the bank, but for deposition or the withdrawal of the money, we have to open the account in the bank. Means to take all these advantages from the bank, you have to open an account in the bank. Okay, and there are the various types of the accounts. So there are the various types of the accounts. We are going to see the different types of the accounts. Okay, so what we have seen here, that we have seen the definition of the bank. What is the bank? Bank is nothing but the government recognized institution that carries out the transaction of the money. Okay, and what is the second use of the bank? That the bank makes it easier to plan the use of the money. Okay, and what's the third? That the bank gives us the idea about the financial planning. Means the financial planning so to take all the advantages from the bank, means to deposit the money or deposit the cash in the bank, to withdraw the cash from the bank, you have to open the account in the specific bank. Okay, you have to open this account in the specific bank, and there are the different types of the account. So we are going to discuss the different types of the account. The two main accounts are the saving account and the current account. This is the two basic types of the account we have to open in the bank. Okay, now what is the current account there? This is a current account. The current account is mainly for the traders and those dealing in the money on the daily basis. Means the trader, for example, the traders which needs the money daily. Means they have to deposit the money or withdraw the money on the daily basis. These proprietors or the traders use the current account. Okay, this account is known by the current account. Okay, an account holder can deposit or the withdraw money any number of the times in a day. Then what is the main characteristics of the current account? Then that the account holder withdraw or deposit money any number of times in a day. Means, first of all, then what is the current account then? The current account is used by the proprietors or the traders which needs the money on the daily basis. Okay, means they have to withdraw or the deposit the money in a single day on a so many times. That's why this account holder can deposit or the withdraw the money any number of the times in a day. Okay, the bank issue a passbook for this account and also a checkbook on a demand. The bank does not pay an interest on this money in this type of the account. Money can also be withdrawn or deposited by the check. Okay, so what is the disadvantages of the current account? The only main disadvantage of the current account is that the bank does not pay any type of the interest. The bank does not pay any type of the interest on the current account. No, and what facilities are provided by the bank in a current account? The proprietor or the trader can deposit it or the deposit or the withdraw the money at any number of the times in a day. Also, the bank provides the checkbook. The bank provides the passbook. What is the passbook then? Passbook is nothing but the book in which all the entries of your bank related transaction. Means when you deposit the money in the bank or when we withdraw the money from the bank, then all the entries are saved or done in the passbook. You have to put the entry for deposition or withdrawal of the money through the bank in the passbook. Now, what is a checkbook? Checkbook is nothing but the book by which or the check you can withdraw the money or the deposit the money in the bank with the help of the checkbook without cash. Means if you have to withdraw the money or the deposit the money without cash in the bank, then you should have to use the checkbook. Also, the checkbook and the passbook are provided by the bank in the current account also. Okay, in the saving account, what is the advantages of the saving account? The checkbook and the passbook. The checkbook and the passbook is also provided in the saving account also. But what is the disadvantages of the saving account then? There is a certain limitation on the withdrawal and the deposition of the money in a single day or in a month. Okay, means there is no limitations. Okay, there are some limitations in the withdrawal or the deposition of the money in that account. Okay, so means in the current account, an account holder can withdraw or the deposit money in any number of the times in a single day or a single month. But in the saving account, there are the certain limitation on the deposition and the withdrawal of the money that account. Okay, this is the main disadvantages of the saving account over the current account. Okay, now what is the advantage of saving account then? Means the bank provides some interest on saving account. Means the money which is deposited in the saving account, the bank provided or gives some interest on that money when we put that money in a saving account. Okay, but in the case of the current account, the bank does not pay any interest on that money which we have put or which we have deposited in our account. Okay, now what is the saving account then? The person can deposit a minimum amount and open a saving account. In some banks, no minimum amount is required for opening an account, and the bank pays some interest on the basis of the daily credit balance in the account. Okay, the bank pays some interest on the daily current balance. Okay, for example, today, for example, the person A opens an account in a B bank. Okay, so for example, the person A opens an account in a B bank and his balance is 10,000. Okay, so his balance is 10,000 for the Monday. Then some interest is paid by the bank on this 10,000 for this person A for the single day. Okay, but in the case of the current account, if this person puts the 10,000 rupees in the bank B and the type of the account is current account, then the bank does not provide any type of the interest or does not give any type of the interest on that on this 10,000 rupees. So this is the main difference between the saving account and the current account. What is the difference? The difference of the interest means bank provides the interest on the saving account and does not provide any interest on the current account because there are some limitations on the withdrawal or the transaction of money on the saving account. Means there are some limitations on the withdrawal of the money in the saving account. That's why the bank can use that money in for their personal use. That's why they provide some interest on the saving account and does not provide any interest on the current account. Okay, so there are some restriction on how often money can be withdrawn from this account. Means on the saving account there are some restriction. Okay, for this account the bank issues a passbook on demand and a checkbook. Also on saving account and current account, on both the account the bank issue the passbook and checkbook. So this is the basic difference between the current account and the saving account. There is the difference of the interest. The difference is of only the interest and the limitations on what? That is the transaction of the money, means the withdrawal and the deposition of the money. Okay, so what is the third account then? Third type of account. So our third type of account is the recurring account. What is the recurring account and recurring deposit account? Then the account holder can decide the amount to be deposited every month in the account. Means in the recurring deposit account, the person or the account holder can decide the amount of the money. Means in the what is the basic definition of the recurring deposit account? Then in the recurring deposit account, the account holder, means the account holder or the person which have opened the bank account in a certain bank has the decision to decide the amount of the money he has to save, or he has to put, or he has to deposit it in account in every month. For example, person A opens an account in a bank B. Then if he opens a recurring deposit account, then he have to decide the amount of the money. For example, he decided the 1,000 money. For example, he deposited the 1,000 rupees in the bank. Then for every month he has to deposit the 1,000 rupees in that account. For example, for the month of the January he has to deposit the 1,000 rupees. For the month of the February he has to deposit the 1,000 rupees. Means he have to deposit, he have to put the money in every month in that account. Means the recurringly, means he have to put the money at that account in recurringly. Means the account holder can decide the amount to be deposited every month in the account, and the bank gives the interest on that deposit which is more than paid by the saving account. Means, and bank also provided some interest. Bank provides some interest on the recurring deposit account which is greater than saving account. Okay, and on the recurring account you can open the joint account. Means the husband and wife or the business partners can open their account jointly in the recurring deposit account. Okay, now what is the fixed account? Fixed account or the fixed deposit? The depositor deposits a certain amount for a fixed period of the time. Depositor deposit fixed amount for the fixed period of time. Means in a fixed deposit, depositor deposit the fixed amount for the fixed period of the time. This is nothing but the fixed deposit. This deposit attracts a greater rate of interest than the saving account. Means the rate of interest in the fixed deposit is maximum. Okay, for the maximum. Because why the rate of interest is maximum? Because once you deposited the fixed account in the bank for the fixed period of the time, then you are not able to withdraw any type of not a small amount from that money. Means, for example, if you deposited the 10,000 rupees for 1 year in a fixed deposit, then you are not able to withdraw the single rupees up to the 1 year from that 10,000 rupees. This is nothing but the fixed deposit, and that's why when there are the more limitation, the interest is also the more. That's why the interest on the fixed deposit is maximum. Okay, what is the fixed deposit then? In the fixed deposit, the depositor deposits the fixed amount for the fixed period of the time. And this deposit attracts a greater rate of the interest than the saving account. Okay, however, the rates are different in the different banks. Senior citizens get slightly greater rate of the interest than the usual. Okay, what are the rate of interest? Then the rate of interest is differ for the different bank. Means it differs from bank to bank. The rate of interest is different from the different bank, and for the senior citizens, means certain bank provides the more interest for the senior citizen than the normal account holders. Okay, so what we have seen here, we have seen the definition of the bank. What is the definition of the bank then? Means, what is the bank? Bank is nothing but the government recognized institution where the transaction of money or the transaction which is related to money is done. For example, the government recognized institution, in that institution, what have done? The transaction which is related to the money is done. Okay, then to take on what are the use of the bank, then what can bank is done, what bank provides the various advantages or the various facilities. That the bank provides the financial planning. That is the financial planning. Bank also provides some interest on your money. Okay, also bank provides some facilities about the use of the money. Means, how we use money or how we grow our money. These facilities also given by the bank. Okay, so these are nothing but the advantages of the bank. Okay, so to take these advantages from the bank or to take the facilities from the bank, so one person have to open an account in the bank. Okay, we have to open the account in the bank. Okay, so which type of the account we have to open? We have seen the 4 type of the account. The first account is the saving account. Second account is the current account. Third account is the recurring deposit account. Fourth account is the fixed deposit account. Okay, we have seen the 4 different types of accounts here. Now, what is the saving account? In the saving account, the person have to withdraw or the deposit a certain amount of the bank, some certain amount of the money in the bank in the saving account. But in the saving account, there are some limitation on the withdrawal or the deposition of the money. Means, how many times you have to withdraw or do the transaction of the money. There are certain limitation in the saving accounts. Okay, but the current account is free from such limitation. Means, there is no limit on how many times you can withdraw or deposit the money in the current account, or how many times you have to do the transaction about the money in the current account. Okay, so this is nothing but the current account, which is used by the proprietors and the traders, which needs the money on the daily basis. Means, they have to do the transaction so many times in a day. That's why they open a current account. So what is the difference between the saving account and current account? Then it is a difference of the interest. Means, on the current account, the bank does not provide any type of the interest, but on a saving account, bank provides some amount of the interest on the saving account. Okay, now what is the recurring deposit account? In the recurring deposit account, the person have to decide or have the right to decide the certain amount which he can deposit on a monthly basis. For example, he can deposit, for example, this month he deposited the 1,000 rupees, then he has to deposit the 1,000 rupees in the next month, and again 1,000 rupees for the next month. Means, he has to deposit the money in the recurring account by month, and also the interest on this recurring deposit account is greater than that of the saving account. Means, bank provides the more interest on the recurring deposit account than that of the saving account. Okay, now what is the fixed deposit account? Then in a fixed deposit account, the account holder or the depositor or the person deposit the certain time of certain fixed amount or a fixed period of time. Means a person deposit or the put some money for the fixed the amount for the fixed period of the time. For example, person puts the 1 lakh rupees for the fixed period of the time, that is for the 2 years. This is nothing but the fixed deposit. For example, the person deposits the 2 lakh rupees for the 2 years, then this is nothing but the fixed deposit account, and the bank provides the maximum interest for the fixed deposit account. But the disadvantages of the fixed deposit account, that you can't withdraw the single rupees up to this period. Means this man is not able to withdraw the single rupees up to the 2 years if he deposited this money in the fixed deposit account. So these are the 4 types of the account, that is the saving account, current account, recurring deposit account, and the fixed account. Okay. And what are the advantages also? That is the checkbook, passbook. Checkbook and passbook is provided by the all type of the account holder get the checkbook and the passbook from the bank. Okay. So next is ATM, credit and debit cards. Now what is the ATM? What is the ATM card, debit card and the credit card? Now what is the long form of the ATM? The ATM is nothing but the automatic teller machine. You have here the ATM machine. Normally we have the ATM cards in our pocket. This ATM card is nothing but the used for the transaction of money at the ATM machine. So if anyone asks you what is the long form of the ATM machine, then it is nothing but the automatic teller machine. This is the long form of the ATM machine. Okay. And what is the debit card then? Okay. The use of this all three is nothing but a transaction of the money without cash. Okay. This is the transaction of the money without the cash. Okay. So the ATM card, debit card and the credit card, these all three cards are provided by the bank to you if you have the account in a certain bank. Now what is the ATM card? You have seen the various type of the ATM machines of the various bank on the our city. That's a ATM machine. This ATM machine is nothing but the automatic teller machine. So bank provide you the one card which is nothing but our the ATM card. This ATM card can be used to withdraw or the this ATM card is used to withdraw or the deposit, and now this ATM card is also used to deposit the money in a certain or the definite ATM machines. Okay. So this ATM card is used to deposit for the deposit and the withdrawal of the money from the ATM machine without going to the bank. Means to avoid to going to the bank, you can withdraw the money directly from the ATM machine if you have the ATM card. Okay. Now what is the debit card and the credit card? The bank is also provide you the debit card and the credit card. For example, you are having the 50,000 rupees. If you are having the 50,000 rupees in your bank account, then bank provide you the debit card. Okay. So debit card. So when you go for the online shopping or the cardless shopping, for example in a big mall or in a shop, you have to pay or you can pay your bills directly by using the debit card. Means there is no need of the cash. When we use this debit card, the amount the certain amount is directly debited from your account. Okay. So you does not need any type of the cash. You can pay your bills or you can pay any type of the requirement of the cash. This can be done by the debit card without the cash. Okay. You can simply swipe or you can simply wipe out the debit card to pay your bills. And also the debit card and the credit card is nothing but the same. Also the credit card is debit card is given to the account holder which already having some certain amount in his account. So the debit card is given to such person. And what is the credit card? Credit card is nothing but one type of the loan. Okay. The bank gives you some amount as a loan, and this amount and also provide the credit card for that such amount. For example, the person A takes the loan of the 50,000 rupees from the bank B, then bank B provides the credit card to the person. Okay, now this 50,000 rupees is nothing but the loan which have taken by the person A from the bank B, and so to pay the bills or to pay online shopping or to the malls or any type of the payments, the person A can use the credit card. Okay, he can simply wipe out or swipe the card to make the payment. So, and this certain amount is directly debited from this amount, okay, which is from the bank. So there is no need of the cash, and you doesn't have to go to the bank. So if you are having the ATM machine, then you without going to the bank you can have the cash. Okay, and with the debit card and the credit card we can make the payment or you can pay the bill without the cash. So this is nothing but ATM card, debit card and a credit card which is provided by the bank if you are having an account in a certain bank. So ATM card, debit card and credit card are nothing but the facilities which is provided by the bank to you. Okay, now on your book, that's the page number 70. That the one page is given. This is nothing but the passbook. This is nothing but the example of the passbook. Okay, and there are the serial number and the date are given, and the second part and the second the second column is of the particulars, means the particulars. Okay, and the fourth is nothing but the check number. The fifth column is about the fifth and the sixth column is about the amount which is withdrawn and the amount which is deposited, and the sixth column is about the balance. Okay, so on the date, that's the 2nd of the February 2016, the cash, means the cash is deposited on the cash when transaction is done. Okay, this transaction is done by the cash. Okay, so this that person, for example, the person A having an account in the bank B, and the bank B provided a passbook to the person A. Okay, the bank provided the passbook to the person A. What is the passbook? Passbook is nothing but the entries or which have all the information about the transaction of your which is the transaction you have made to the bank. Okay, so on the 2nd February of the 2016, this person A done and one transaction. What he have done? He deposited the 1500 rupees in the account. Okay, he deposited the 1500 rupees in the account. And what is in the 7th column? The 7th column we have given the balance. Okay, the total balance of his account, and this is nothing but the amount credited or amount deposited. And the 4th column is account amount withdrawal. Okay, and this is particular in the particulars. This is nothing but the what he have done. The transaction is done with the help of the cash or with the help of the check is given in the column of the particulars. Okay, now on the 8th February 2016, he deposited certain amount in his bank account. Okay, but this transaction is done by the check, not with the cash. Okay, so this transaction is done by the check. Okay, now so as this transaction is made by the check, so on the 3rd column there is a check number is given. Okay, checkbook which is provided by the bank to the person A. This per the every check there is a certain check number is present on that every check. So when you deposited or when you do any transaction with the help of that check, then the certain number or the number on that check you have to put in your transaction of the passbook. Okay, so the check number is given nothing but a 232069 on the 3rd column. This is nothing but the check number. Okay, so what he have done, he have deposited the 5000 again with the help of the check. Okay, on the first transaction he have deposited the 1500 rupees but with by the cash, and in the second transaction he have put deposited the 5000 rupees but with the help of the check. Okay, so what is the balance then? First of all, the according to the first transaction, the balance is of our 7000. Okay, when we deposited the 5000, basically that's our balance is nothing but the 12,000 rupees. Okay, so the balance of the person is 12,000 rupees. Okay, now what is the third transaction then? In the third transaction, the person A withdraw the money with the help of the check. Okay, so check can be used for the deposition and the withdrawal of the money. Okay, and what is the in the third column? Then in the third column the check number is given. Okay, but what he have done, he have withdrawn the money. Okay, with the help of the check. How much money? That he withdraw the 3,000 rupees. Okay, so what is our remaining balance then? The 3,000 rupees gets subtracted from the 12,000 rupees. So our remaining balance is nothing but the 9,000 rupees. Okay, so on the fifth transaction, what he have done? He self means he goes to the bank. The person particularly goes to the bank and withdraw the money with the help of the slip. Okay, so he withdraw the 1500 rupees again. So what is the balance then? The 1500 rupees get subtracted from the 9000 rupees, and so the remaining balance is nothing but the 7500 rupees. Okay, on the fifth transaction, what he have done? Yeah, on the fifth transaction, as we consider this account is nothing but the saving account. Why? Because on the fifth transaction the bank used a certain interest. Okay, the bank used an interest of rupees 135 rupees to the person A. Okay, so this 135 rupees is withdrawal or in a should become in the withdrawal column or in the credit column. So this 135 rupees should become in the deposition or the credit account. Okay, so 135 gets added to the 7500 rupees. So this is nothing but the 7635 rupees is our the balance. So this all the transaction means the withdrawal of the money with the help of the cash or with the help of the check or by the self. Okay, and the deposition of the money with the help of the cash or the check or by the self. This all the transactions are present, or we have to put this all the transaction by the bank on a certain book, and this book is nothing but the passbook. Means you get all the transaction, all the history of the transaction in the passbook. Okay, so what type of the transaction are done? That's the withdrawal of the money is done, the deposition of the money is also done, and also the interest is provided or the interest is given by the bank to the person A by on the deposition of the money. Okay, he deposited the 7500 rupees. Okay, so he get the interest 135 rupees on that 7500 rupees, and his balance get increased by the 135 rupees. Mean this is the interest. Once we can, so one thing we can say that from our previous bank account, then the person A gets the interest of 135 rupees. So we can say that this account must be of the saving account. Okay, this is the saving account. Why this is not the current account? Because on the current account bank does not provide any type of the interest, but here the person A gets and 135 rupees of the interest. That's why this is the saving account. While this account is nothing but is not recurring deposit account. This is not a recurring deposit account because here some transaction of the withdrawal of the money is done, but in the recurring deposit account the person have to only deposit the certain amount of the money after the equal interval of the time. This interval of the time is nothing but the single month. Okay, he have to put or he have to deposit the money after every month in the recurring deposit account. Okay, so this account must be is of the saving account. Okay, so this is nothing but the bank. What we have seen here up to this, that's the bank definition of the bank. We have to have seen the different types of the account. Then we have seen the passbook. Means we have seen the different entries in the passbook. That is a withdrawal entry, that's a withdrawal entry, that is a deposition entry, and also the entry of the interest. So this is nothing but our bank. So in the next lecture we are going to discuss about the simple interest.